Let me show you something.
Uh,
Which month do you want us to do on this back testing? Not really a back test, sure, but just which month?
maybe October, maybe.
October.
Yeah.
Okay, so what I will do is let me change. This is FXCM. Let me use Oanda USD JPY on Oanda, and then I'll go to the monthly time frame. Sorry, monthly time frame. I have to delete everything. Okay. Sorry, guns. This was way back 2017 and all those stuff when I was still learning trading. So forget about these things.
Okay.
You get what I mean?
Yeah.
I didn't even know I still have those charts here. Okay, so here is the monthly time frame, and we are going to wipe off November
Okay.
since we are doing October. This is November. I'll take November out, and then October. So before I go down to October, this is October. This is the month of October. This candle right here. I want to show you how many trades you could have gotten just sticking to this one pair and BFR. But then let me introduce BFR for you first.
Thank you.
I've already done the introduction, so let me make it clear. So I don't know the video you watched because at some point I changed some things on BFR. Not because the first one was not working, but it was giving too many setups. And then with too many setups, you are also prone to too many losses and stuff like that. So I decided to reduce it. Instead, what are we looking for? Let me just draw a high, low. Let me put it something like this. Let me keep it here. So this chart right now, it's 1 hour time frame. I'm going to put in a box like this. This is the 1 hour time frame chart. We are using just two time frames, 1 hour and 5 minutes. So this is the 1 hour right here, the 1 hour. And then what happens here is that these boxes that I put in here are fair value gaps.
Okay.
So right now, before I was telling you any time frame, but now we are sticking to fair value gaps on the 1 hour time frame. So this is the interesting part. You know, one funny thing about ICT is that once you see price make a move like this, they'll wait for price to tap into a fair value gap and then they'll buy to continue the high.
Yeah.
But it's very funny that not many people understand that these fair value gaps are traps. So when price taps into a fair value gap and rejects, many people will take the entries, their stop loss will be here. Like once it rejects, they will now start buying. And then their stop losses will be below the candles inside the fair value gap and stuff like that. And maybe if you're already on a trade like this, they will move their stop losses here. So this is where it gets interesting. Someone once asked me like, if the institutions are buying and then you are buying too, why do they have to come and liquidate you first since all of you are buying? They could just continue the trade instead of liquidating you, taking out your orders. I was like, it's not that simple. He asked me why. So I told him, if you place a buy market, are you listening?
Yeah.
Your stop loss is a sell order, and so is your take profit. So if you are selling in the market, your stop loss is a buy order, and so is your take profit. Do you know how that means? Okay, someone might be asking, he asked me, how is both your stop loss and your take profit different from your initial order? Let's say you are buying. I told him it's just like you going to the market and buying bread. Let's say, what's the currency you guys use in Hong Kong?
Hong Kong dollar.
Is it okay? Let's say you go to a supermarket and tell them you want to buy bread. You're a seller and you just tell them, they tell you, okay, bread is 5 Hong Kong dollars and something like that. Say, okay, I'm buying because I want to sell it too. So for you to sell that bread you bought to make a profit, you have to sell it at least above that price you bought it from.
Yeah.
So you have to sell it something like $7 or let's say $6 or maybe $5.5 or something like that to just make 0.5 cents and all those type of stuff. So that point to place your TP when you buy a market is because you are okay to sell back the prices, sorry, the stocks or the currency pair you bought at that particular price. So you are okay that if price is going in your way, you are okay with this price. So this is a fair price for you. You are willing to sell back everything you bought at that price. That's why your take profit is a sell order. Now, your stop loss is also a sell order when you are buying, because when you bought that bread at $5, you wanted to sell it at a price higher than $5. But then all of a sudden, the price of bread starts dropping. And then you now say, oh my God, bread is losing value and I have bread to sell. Let me just sell off everything before I will end up losing everything I have. Let's say the price of bread have now moved from $5 to $4.5. So you now say, at least let me just sell it at this price before I will lose the entire $5 I bought the bread for. And then I won't even get anything back. So that is the concept of stop loss. The market is going against you. Okay, I will just take this loss and recuperate, recumulate, and come back later, something like that. That's the concept behind stop loss. So people that normally follow ICT, let's say in an ICT group, you have 100,000 people in the group. Let's just take for example, and all of us has $100,000 account. All of us has $100,000 account. That $100,000, and someone comes in there and plays, and let's say this is a fair value gap, and he says, okay, everyone, let's buy from this market at this point, and then our stop loss will be here, and then our take profit will be here. Now, the market may all of us now risk $1,000 on our accounts. Every single one of us, 100,000 of us risk $1,000 right here. So you could do 100,000 times 1,000. That should be 10 million, right? $10 million. That should be, sorry, that should be $1 billion. It's not 10 million. $1 billion. So all of us buy from here and place a stop loss of $1 billion right here. Now this is the interesting thing. The institutions are also buying, and then they themselves are seeing your stop loss because they have the tools to see it. We don't. Now they want to buy also, but all of a sudden they see a sell order of 1 billion. That means someone is willing to sell to them 1 billion worth of prices at this point. Like, I hope you understand what I'm trying to tell you. 1 billion sell order resting here, which are all your stop losses. So if you were the institution, wouldn't you drive price to buy this order from here and then continue where you were going to?
Yeah, why not?
Good. Because this is now a lower price from where they themselves want to buy from. So they will definitely come and take these orders and then continue up. That is the concept people don't know. So that is what we are waiting for. So once you see these highs and lows inside fair value gap, 1 hour time frame, we'll now mark it with the horizontal line. And then we call it RTA. The RTA means retail trading area, or we call it TL, temporary low. The same thing here. RTA, retail trading area, or we call it TH, temporary high. Now we now wait for markets to make a three-step movement. 1, 2, 3. 1, 2, 3. So
Is
I
that
call
like
it
the label that you have ABC?
yes, the ABCI label. Or it could be like this. This is now on the 5 minutes time frame. This is now on the 5 minutes time frame. A, B. Let me change the color of these ones so differentiate it. Let me make it blue. Good. And the blue color is 5 minutes. The black color is 1 hour. So once we've labeled these temporary highs and temporary lows in the markets, we now drop down to 5 minutes time frame and wait for price to sweep it. Once price has swept it, we look for market structure shift, and then we get I need 0.5% of my account and then targets at least times 4 or times 5. If you are going times 4, you are getting 2% of your account a trade. If you are going times 5, you are getting 2.5%. I will suggest you stick to 1 is to 4 for now until you've mastered everything before you go to for 1 is to 5, something like that. Or you can even go for more because this particular trade, sorry, I've removed it. The particular trade is already running 1 is to 8 for me, and that's 4%. Now that doesn't mean you can't lose 1%, but you are going to have losses too, of course. It doesn't mean that every single setup is going to be on everything because there are sometimes you might even get 3 losses in a row or something like that. But at the end of the day, you see yourself down just 1.5%, and with one trade you get it back and even in profits. So that is why risk management is the best and the most vital thing to get when you are trading. I'll give you my trading plan. So you use it. For now, I want you to stick on demo account before you move into live account. So this is BFR for you. This is what I'm looking for. Okay, the B here means build up. So build up of liquidity. So all these highs and lows, consolidations, and all those stuff inside fair value gaps. That's what I call build up. Now there's something called FU candle. Have you heard of it before?
Yes, yes. Do we
The
have
FU
your
candle.
candle for this trading time?
No, you don't. But I just took the FU from the FU candle, institutionally funded candle, or I call it fuck you candle or something like that. So that's what the market. So the F means the fuck you or the FU candle that wipes out the liquidity.
Yeah.
And then the R is the rally because after a sweep of liquidity, price will rally either to the down or to the upside. So So for the other thing, OPR is not associated with BFR, it's with AMS. That would be on the next class. That's when I will introduce AMS to you.
Yeah.
You don't really need AMS because BFR is the my number one strategy. So if you are okay, if you are good with BFR, don't need AMS. But I might still introduce AMS to you if you really need it. No problem. So that is it about BFR. Now let me show you the power of BFR. I didn't really get ready for this class. So you are the one that take this note.
How do you manage time? Identify the time.
Identify what?
The target. Where to TP?
Okay, the first point to target is another high or another low inside the fair value gap.
Yeah.
That is where you are supposed to be targeting. Or if that is too far away, you just go for 1 is to 4. Wait to the watch. That is what I tell them to do. So let's go to 1 hour. And we are going to get to the 1st of October. I guess this Monday, October. This is where October started. Somewhere. This is where October started on Monday. Here. So everything from here to here is just the month of October. Now, let's get to it. What you have to wait for is highs and lows inside fair value gaps. So the first one, as you can clearly see, this is an auto. There it is. Is there a fair value gap here? There's none. There's no fair value gap all around these points. There's none.
Yeah.
There's absolutely no fair value gaps all around here. Even here, there's none. There's none. This one I've played out. So this was before the month starts. This is a fair value gap right here. Is there a fair value gap here? I think there is. Where did this happen? Is it? Okay, this one. Let me mark out this fair value gap. from here to here.
Yeah.
Okay, this was the first one. This one, yeah. Now, also, this one. Now, when I mean that the candle is inside fair value gap, it can fill the fair value gap completely and get past it, but as long as it doesn't break the high or the low of the first candle of the fair value gap, like this is a fair value gap here. This one, let me mark it out. This one is a fair value gap, and there are three candles involved. One, two, three. So as long as this low right here doesn't get past the first candle of this, like this first candle of the fair value gap, one, two, three, is valid. So this and this were serving for this entire liquidity purpose.
Right.
You get it now?
Yeah.
Good. And that was what price swept with this move. Now, if we go into lower time frame, we will get an entry at this point. So I'm just going to be marking them out. We are not going to, maybe at the end, we'll come back and see how many of them we get entry from and how many we wouldn't. So let me use a tool that I will be using to mark them out. I can't find it. Oh, okay, I think it's here. Eclipse, yeah, Eclipse. So I will use my Eclipse and mark this one out. Something like this.
Do we have to get a higher temperature bias for this trade?
No, you don't need that. Please, that's one funny mistake. ICT traders make bias. I once saw someone like, there's nothing like bias. He said ICT said makes things easier when you are trading. And then I asked him, how many times have you had a higher time frame bias? Pricing. He said, well, it's just price being priced. I said, no, it's not price being priced, it's you being stupid. Because you can't tell price which fair value you have to go and fill.
Yeah.
Like, okay, let's say you see the price is going down, price is heading down. But then you stick to your buyer that tells you that price is supposed to go up and go and fill a daily fair value gap. And you keep buying as price is going down. That's that is very stupid of you. Like someone, there was a day I posted that I sold Euro USD, and someone said that the daily bias is bullish for the day, it's supposed to fill a fair value gap. I told him, but I got the sell already. He said I should try it again tomorrow. The only thing I responded to him was like, I can't just wake up tomorrow and sell Euro USD unless my setup gives me a sell. Unless the chart gives me a sell setup for my strategy, I will sell. He said, we'll see. And the next day, it still happened. I sold Euro USD again and I tagged him. That was on Facebook. And he was like, I got lucky and stuff. I told him, yeah, I got lucky, but you've had 2 stop losses in a row yesterday and today. And you're still following your daily bias. So, who amongst us is being stupid right now? And stuff like that. This doesn't use daily bias or stuff like that. So, they don't need it. So, this is the first one. First high inside fair value gap. We've had this one settled. Now, this is the next fair value gap price here and this one, but this low pass all of them, their first candle, so it's not valid. So we can't take that. Now, the second one is this one right here. This high right here. I will drag this out. Now, why is it a temporary low? This is a fair value gap here.
Yeah.
Can you see it?
Didn't get above the high of the
Yeah, it did get past the high of the first candle exactly, and that's why it's valid. That's the second one. So we'll be getting our entry in around these points.
Okay.
After the sweep. So now this one starts inside this fair value gap right here. You can see it. So it is also valid. So after the sweep, we should be getting our entry in around this point. I'll still mark it out. Now, let's come down. Let's come down. There was a fair value gap here. and this was where this low, that thing. But price after sweeping it didn't give a market structure shift. It just kept going down. So it is not valid. This one right here would have been valid if there was a fair value gap here, but there was none. As you can see, it's completely filled, so it's not valid. The next fair value gap we have is it the fair value gap here? I think
No,
just very tiny.
but it
Sorry,
trade below the first candle, right? Did it? Oh no, it
here.
yeah.
Which one?
Uh,
It didn't trade below the first candle.
yeah. So it's
This is the low I'm looking at. This one. It didn't trade past below the first candle. So this was where when it was swept. So we should be getting entry
mm.
around this point.
How about the one below the red shirt, the middle?
Here was this one.
No, the upper.
This one.
Yeah, there is a FEG.
Yes, there's an FCG. But then after price swept it, it
About
didn't give any.
the upper one.
This one. This one.
Yes.
Yes. I didn't see it. Sorry. There's an FUG, and this was when it was swept, but this would have been a loss, I guess. We will be looking for entry in around these points. Probably would have been a loss, but let's continue going. This
Do we
one,
have to take care about premium discount, that kind of concept?
no, you don't need this.
Okay.
Just look at what I'm showing you. This one, this was the first low inside this fair value gap, and this was the one that swept it, so we should be looking for entries around these points. I just want to show you how powerful BFR is. This one. And then even this high is still inside fair value gap. This one. And they haven't gotten past the first candles.
Yes.
So we should be looking for entries around here or here.
Okay.
So because sometimes it might give you a fake out and then try to give you first entry and then take you out. But then if it gives you another entry, you should be looking for it. Now, this one, there was a fair value gap here. It's a very interesting case right here. There's a fair value gap here. Even this one too was still valid. This one, maybe we have gotten a loss there, something, but it's still valid. It's still very much valid here. So there was a fair value gap here, and this candle formed an equal low with the first candle of the fair value gap, something like that, equal low. So it became a point of target for the future. So this one swept it. We should be looking for entries in around this point. Are you seeing it? So this is just in a month. So you should be counting it. How many already are we looking at?
Now we have extra
2, 3, 4, 5, 6, 7, 8. 8 cycles. So continue. This is valid. This one is inside this fair value gap, as you can see. Very clear. And after the sweep, we should be looking for entries around here.
Okay.
So this one is not valid because there's no fair value gaps here. And this was the only place they had fair value gap and it got past the first candle. So invalid. Totally not valid. Then we continue. No fair value gaps, no fair value gaps. So everything here is off. No fair value gaps. And then this was just really very choppy. But let's go through them because that is what we are looking for. Now, this is a very interesting case in the markets. This was inside this fair value gap So we should be looking for our entries around here, somewhere here. If you get the entry here. Now, after this sweep, this low was still inside this fair value gap. So we should also be looking for entry after this. Yes, after it swept, and then maybe you could have gotten our entry in around this point. When we are done, we'll come and check out all these circles. So the next point of liquidity will now be this point, but this was now caused by news. I think CPI, but that was on Tuesday. So it should be CPI. I wouldn't be trading. And I will also suggest you wouldn't be trading during high impact news or something like that. But then this point right here will now serve as a liquidity point in the future. You know why? Yes, that's just where it's acting. So it will serve as a liquidity point. Price came very close to sweeping it, but didn't quite sweep it. Right here, I wanted to take it was swept, but it didn't quite sweep it, which was bad. Not that bad anyway, but let's continue. So we look at this one first. We have this high inside this fair value gap, which was swept by this week. So we should be looking for entries in around this week. And this week now finally filled this fair value gap completely, but still didn't get past the first candle. So this week itself still serves as a liquidity. Yes. And this was when it was swept.
I have a question. For the
Yeah.
left-hand side, there is a multiple FEG. So do we have to change time frame to combine it as one FEG?
No. Just like you don't change your time frame. Keep it on the same thing you are doing. Like on the same 1 hour, it will still be giving you, as it's filling each of them, it will be giving you entries as it's going down, just like it's doing it right here. That's how it will be doing it until you get an entry. I missed one. I missed this one right here. That was the low we had, and it was inside this FEG. Didn't get past the first candle and all this stuff. So this is the candle that swept it. We should be looking for entries and 5 minutes. Of course, you understand the concept of market structure shifts, don't you?
Yeah.
You know what market structure shift, right?
Yeah.
So, sure. Thank God. Then that would be it. Now, let's fair value gap here. Oh, it's completely filled. And do we have any here? I think we do. See the fair value gap. This is first candle, and this didn't get past it. So, surely we do have a structure here that we should be looking at. Maybe we have gotten a loss here before price now finally decided to respect it. But that's the rule, so we'll follow it. There's a value gap here. I think there is this one too. It's valid. This one. Valid. Just was the sweep. Maybe we would have gotten an entry before price went up. Stuff like that. Let me circle it from here to this point. We have had our entry. There was no fair value gap here. This one was filled completely. No fair value gap. No fair value gap. No fair value gap. No fair value gap. Down. There's no fair value gap here. It's filled completely. This is the only point that has fair value gap here. And this is where this high came in. So this one failed.
So we don't have
But
to
this,
consider how big is the FEG is, right?
no, you don't have to consider how big or small it is. As long as it's an FCG, it's valid. So we are also supposed to be looking for entries around these points.
Yes.
And entries around these points. This one will most probably fail. no problem. This one. And then we have this inside this fair value gap. I think, yes. I hate it when it's swept by weeks like this.
Hmm.
There will be no entry for me here. Absolutely none at all. And then there's no FVG here, 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 here. Is there here? I think there is this one here.
So we have a
Candle.
temporary low or high. Do we have to stick in the H1 chart to let the body close above or below it to switch in the lower time frame?
Yes, if you want to, or you can even just once you've spotted it and drawn out your line,
Hmm.
you can drop down to a lower time frame. But the thing is, you might miss some trades
Hmm. Understand.
while you're on the lower time frame. There might be another temporary high and low, and then you would have missed it or something like that. Something
Hmm.
like that. And all those stuff. So this one is there's no fair value gap here, and so this is totally off. This one, but there's also no fair value gap here. It's filled completely. Right here, this is the only fair value gap, and there was no high inside. So it's off.
Great.
Everything here didn't give a setup.
Hmm.
No fair value gap, no fair value gap, no fair value gap. This is the low we were now supposed to wait for price to sweep, but it wasn't swept. So we let it be now. How many cycles do we have? 1, 2, 3,
17.
5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 cycles. Let's look for entries on all of them and see how many we'll see. So let me use the play mode. I'll start with this one here. So here's the fair value gap I'm looking for. As you can see,
Yeah.
let me mark it out. And then this candle immediately after this fair value gap is the first low we had inside it. Sorry, the first high we had inside the fair value gap and price rejected. And then this one came out and swept it. Immediately after the sweep, we dropped down to a lower time frame, 5 minutes. And you can clearly see our market structure shift here. If you can see it clearly, this is the market structure shift around here.
Yeah.
If you can see it clearly, you go to your line chart. Now you can clearly see it. These are market structure shifts. So your other block or your demand zone, you can go with this or you can go with this, something like this, and wait for price to start you in. This your entry should be here, stop loss. This is a 1, 2, 3, and then if you extend this is a 1, 2. We go for this. This is a 1 to 8. Let's see if price is tapping. Oh, missed.
Only type in the OB, the first OB.
Yeah, if you took this first OB, I think you would have get tapped in. Stop loss will be around 5.6, and that would be a 1:6. Let's see if it will hit. Yeah, you might even hold it up to this point. So that would be the first one. We call this one first win of the month of that particular month. We're supposed to look for entry here. We never even had a market structure shift, did we? We never had a market structure shift until price rallied up. So this will be mostly a case of a mixed trade and nothing more. Mixed trade, nothing more. So let's continue because this was a sweep, no market structure shifts. And here, okay, I think we actually did. Let's go back. You know, there are two types of market structure shifts. We have this, okay, let's say we have this one, the one you guys called change of character.
Oh,
This one where it breaks the last low and then come back tapping and drop. And then we have this other type where price now makes a low, a high. The high fails to break this previous high
oh,
and breaks the low
three,
again.
3 days spring.
Yes, you now take it. I think that was the case here. It made this low high and broke it somewhere here. So this should have more likely been our entry point. So this would be a losing trade.
Mm.
I don't like painting it black and blue. I want if it failed, I will tell you that it failed. So you understand that it can also fail. So this would be a loss. We were more likely to go for 1, 2, whatever we were going for. And this would be a loss. So it's one losing trade, one winning trade. The same thing happened here. After the sweep, we had this high, low, high break. So this would be our entry points. You get it now?
Yeah, sure.
So I will reduce my stop loss to like 8 bits. Yes, well covered. Then we go for this 1 to 5. Stuff like that. And price did actually still continue going higher, higher, higher to this one. 1 to 6. So this one, the same pattern of market structure shift. I'll take this out so it will be easier to spot. This was the sweep. This was the low we're looking at. After the sweep, we had this high, low, high, low, high, break. This was our market structure shift. This should actually be our entry points from this week. I like using the weeks at this particular type of trading. From this week,
You mean the previous spring?
yes. So this would be your entry point. This is what I label. These lines are labeled as entry points. Is what I label as EPL, which stands for entry price level. So this would be your entry price level at this point.
So you
So
mark
far we've gotten
how do you mark it?
okay
Is
from
the CE or
look
the
at from this is the longest week.
Yes.
Now this is the week closest to it. From this point, this one stopped till this other point. That is where I marked it at. They call it XT1 model. Have you not have you heard of it before?
just in your video, the first time I hear it.
I will send you a book where it was specified. ST1 model. This is I like going for at least 4 picks. This is 4 picks stop loss. And then this is 1:6. Take profits. You could even hold it to this point. It still hits 1:6. RR take profit. So this was the sweep. And then this one also. Was there an entry for this? I'm trying to picture the market structure here. This was the sweep, price rejected, came back up, fell to break, and then made a low, equal highs, now shifted. With this week, shifted. I think this might be considered a shift in market structure. And here, a shift. If that's the case, this should be our entry points. Maybe this might have been a break-even trade or a break-even trade somewhere here. If it's up to 1 to 4, then we are taking it. There it is.
Do we have to manage the trade during it open?
No, just you can just want, if you want to hold it more than 1 to 4, if it's moving in your direction, maybe after 1 to 3, you break it even. That's just all. And let it either hit your break even or your take profit.
Understand.
So 1 to 4.75, so that's a win. But this one, there was no entry at all. Price did provide a market structure shift, but it just kept going high. It was supposed to come back and tap in here, but it kept going high, so we won't count that.
Yeah.
So it's too far away. So where was that? That was here. So we leave that aside. Now come back here. Remember, we are in 5 minutes
Yeah.
time frame. So come back here and take this out. Okay. So this was the temporary low. This was the sweep, and this was the market structure shift right here. So our entry will most likely be the hidden other block. The hidden other block, I think it's probably going to be a loss, stuff like that. Because I'll most likely place my stop loss somewhere here, just below this thing, the wick. At least 4 pips, like I said. I like going at least 4 pips. That doesn't mean that it's at most 4 pips. I say at least 4 pips. So this is 4.7. This is 4.2. This is 4 pips. Must have hit stop loss. Unfortunate. So this would be a loss. A losing trade. No problem. We'll continue. We would continue. Definitely continue. So I'll take this out. This sweat, this temporary low right here. Sweat. We had a high, a low, and then a high. This was a break. So this was going to be our entry point. Maybe this one. Maybe from here. I think this will serve better. So we'll place our entry at this point. Go for 4 pips stop loss. 5 pips. Not 4 pips. Okay. Also remember to account for spread when you're adding your stop loss. Okay, here is okay. Your spread. So we'll go for this. That's a 1 to 8. And this was so unfortunate that we took a loss here. And then for this one, this probably failed. Now we are looking at. Take this out. This probably failed because there was no market structure shift around here. High, low, high, break. The next point it came back. This might have been a failed trade because this is where we'll be looking for our entry.
Maybe around 2 hours.
Yeah, maybe a 1 to 2, a 1 to 1, and then it will hit break even. Because it's mostly going to be a break even trade. Because this was when the entry came and it was very late. This 1 to 4. Yeah, 1 to 2. Went 1 to 2.18, almost 1 to 3 before coming back down. So this is mostly a break-even trade or stuff like that. I wish we had gotten the entry around this point and then benefited from all this entire move from here. That would have been awesome. Like if we had gotten the entry earlier, that would have been a 1 to 6. But let's call it break-even. So Let's continue. This is very interesting. This one, very, very interesting because I think we would have gotten a loss and then a win afterwards. Because this was the first market structure shift
Mm.
right here.
Understand.
Here,
How do we re-enter re-entry for this?
limit orders. So this will most probably be
Yeah.
our execution. Once you've gotten your market structure shift, you place a limit order. And please account for what's it called? Liquidity. So this will be the entry, our 5 pip stop loss. Now this hit stop loss first. So we'll have to look for another entry. Market was just consolidating and I hate it. When it does this, this was the first entry and it failed. Price kept going off, low. I think there was a break of structure here. And then the next point would be this right here. So maybe let me put it for big stop loss. Stop level. This is 15 pips. So put it 4 pips. Yeah. Okay. Good. And this will be a 1 to 6. If we held it more down to this point. A 1 to 8. So a loss and a win. The same setup. No problem. We'll keep going. This one. This was the sweep. I think we had the same issue around this point. Where was it? Temporary high. Okay, this was a temporary high. I think we had the same issue as that last one because this should be our first market structure shift. And then our first entry will be here and failed. But then we had another shift.
Understand.
So yes. I normally tell them like if you have a sweep and then the first one failed, it gives you another entry. You should try it again. But if you failed again, just forget it.
Mm.
You have to now look for another setup. So this failed, but then we had this second shift right here after it broke with this long week. So this would be a second entry
How
around
if,
this point.
how if the first one we lost and the second one still the same trade but another day? Is it valid?
Yeah, it's valid. It's valid. It's still valid. It's still valid. So let's go for okay. So this will be a win now. I guess this one to 4.9 stuff like that. If we held it down to this point, 1 to 5. So this will be a losing trade and a winning trade. But this one, for this, there was no structure shift until here. This was the structure shift right here.
Yeah.
And now this is where you get your entry
About four,
from this point.
4 to 5.
I think this, I just pray it gets to that point. The stop loss most likely be around here, 6 feet, 1 to 5. So this should be a win. I'm just showing you how it works. Next time we'll be trying it out on what's it called? FX replay. So we'll be placing the entries on demo accounts and then you see how it works. But this was our market structure shift, pricing tapping immediately. This is the other block and then this other block. So this will be entry level 1 to set your limit here or this other demand. This other demand zone. EPL1, EPL2. So we got our entry here. The stop loss should definitely cover everything. And then we go up. This is a 1 to 4. Did it get high? Don't know. Yes, it did. We can even hold it to this other point. 1 to 6. So let's continue this one. I hope you are taking your notes.
Yeah.
This one. This was the temporary high we're looking at. Price swept it. Let me take this out. Price swept it first, and then this was the market structure shift. This was entry level. This one is very clear, very neat and clear. I like setups like this.
Nice.
The place of entry, stop loss, 7 pips, and then it targets the previous temporary low, 1 to 7. The same thing here. I think this would have been a loss here. We have had a loss here. I'm going to add it because I just realized that I marked this out. So this would be a shift and a loss. So I'll add it. When we are done, we count our losses and our wins. So stop loss, is a 1 to 5, failed. I'll take this one out. You see, this was the sweep and this was the structure shift. This is the other block. I should be taking your end from this other block. Entry here, stop loss at this candle body, take profit, 1 to 6, and stuff like that. Okay, you see how more? Not bad. This one after the sweep, there's a structure shift. I think it failed. So here's the structure shift. Here's our entry points. Took a long time though before it came back. So it failed. Failed. And then this. This was the structure shift, and this was now the other block. I think I would have missed this trade unless I used this QM level. This QM level as my entry. You know what's QM?
Yeah.
It should be 13 pips or 12 pips and go for 1 to 4. With my 1 to 4, did it hit? Yeah, it did. So went down all the way to this point. Jeez. Which is okay. Any other one? Yes. This one. I think this was the first one we had. High, low, high, structure shift. This will be our entry points. Took longer, and this will be our entry points. So big stop loss, that's too much. It's okay though. And then we target this point first. That's the 1 to 5. I guess that was it. Yes, that should be it. So now let's count it. It will be 1, 2 wins, 2 1, 2 wins, 1 loss. That's 2 1, 3 1, 3 2, 4-1, 4-2. Sorry, 4 wins, 2 losses. 4. This was a win.
Yeah.
4-2, 5-2, 6-2, 6-3, 7-3, 7-4, 8-4. This was a break even, so it's not counted. 8-4, 9-4. This is stop loss. 9-5, 1-4. That's 10-5, 11-5. Was that all?
Yes.
No. 12-5. Sorry.
Yeah.
12-5. This failed. 13. Sorry. 12-6. 12-6. 13-6. So we had it 13 wins and 6 losses. So this is where it gets interesting. If we were risking 0.5% of our account on this trade, 0.5%, and then we're going to, I think the least RR we had was 4.75, and then the highest was 1:8 or stuff like that, like this one. So 1:10. But let's assume all of them had a 1:5 RR and stuff like that. So if we were going for
over 50.
Eh?
Over 50 out in total.
Yes, so we're going for 1:5, and then we are risking 0.5. That means each of them is 2.5%. And we had 30 wins, so 2.5 times 13. That would be 32.5% gross profits. And now since we had 6 losses, that's 0.5 times 6. Because each loss we take 0.5% of our accounts. So in total we lose 3%. So we now do 32.5 minus our 3%. So we end up the month with 29.5% profit. So you see the magic.
It's amazing.
It's really, really amazing. I just had to do it in just 1 month. So you understand. Our next class, after introducing AMS, we'll now backtest it with a replay to maybe my trading journey or maybe FX replay.
Okay.
I think it will be better that way. So I hope you took notes, and then I wish you backtest another month. We've done October. Backtest on another month and see what you get. Let me see the results of that month when you are done. All right,
So
see you.
when will our next class?
Maybe in 2 days time. I don't know.
Oh, sure.
But I'll definitely be trading tomorrow, so in 2 days time.
So I will let you know I finished my backtest result.
All right.
Thanks a lot.
You're welcome. Bye.
Goodbye.